Greetings everyone and welcome to a new news episode. It's your bull back again, keeping a close eye on every rustle in the crypto barn. Today, we have a fresh episode of truly hot news from the past week. Let's go. The market is starting to recover after a correction. Bitcoin rose by 5.56% over the week, Ethereum by 6.63%, and Sol by as much as 14%. The market's steady climb is bringing optimism back to the community, and I'm here to figure out what caused this week's changes. Let's start with a big event. Tokenized U.S. Treasury bonds broke the $5 billion mark. Fidelity Investments, one of the main drivers of this trend, stated that these assets, referred to as real-world assets or RWAs, will become the new standard in finance. Growth over the past year has been almost 500%, and Fidelity has already filed for its own fund on Ethereum to compete with BlackRock and UBS. Investors see a reliable bridge between traditional finance and blockchain here, and trading volumes confirm the hype. That same day, the SEC surprised everyone by closing its investigation into Immutable, a Web3 gaming company. For 2 years, the agency was probing the IMX token for potential securities violations, but it has now quietly dropped the case. The price of IMX jumped nearly 18%, giving the gaming community a sigh of relief. It looks like regulators are easing their grip. Moving on to more news from that same event-packed day, World Liberty Financial, a project of President Donald Trump, confirmed plans to launch a dollar stablecoin with BitGo. The name is USD1, pegged to the dollar through treasuries, deposits, and cash equivalents. Trump and his sons are promoting it as a tool for global financial freedom, while BitGo handles custody. After a successful token sale, the market expects the stablecoin to strengthen its position. Meanwhile, another sensation hit the U.S. last week. The government lifted sanctions on Tornado Cash. This privacy-focused transaction mixer had been banned since 2022, but the Treasury revised its stance, stating that the technology itself is not criminal. The crypto community is celebrating as it senses a growing victory over oppressive controls on crypto assets. As for Ethereum, on March 24th, exchange reserves dropped to an 8.97 million ETH low, the lowest point in 9 years. That's under 10% of the total supply. Analysts link this to the growing popularity of staking and the lack of whale-selling ETH. Investors are clearly in long-term mode, while exchanges are losing liquidity. ETH trading volumes fell by 14% in just 24 hours. Another big headline is that Digift launched an on-chain fund by tokenizing Apple and Tesla shares. It's an index product on the blockchain that bridges the stock market with Web3. Its initial trades showed a 12% increase, and institutional investors are paying attention, seeing a solid opportunity for diversification. And Trump projects never sleep. Trump Media just announced plans to partner with Crypto.com to release ETPs, exchange-traded products for crypto. They want to tie their assets to such instruments, and Crypto.com could be their partner. Trump Media shares on NASDAQ rose by 6.5%. Finally, the loudest news for the entire crypto community. The SEC has officially withdrawn its lawsuit against Ripple, XRP. After 3 years of legal battles, the regulator gave up, marking a victory for Ripple and XRP holders. The court ruled that secondary sales of XRP are not considered securities, although Ripple's primary sales of $250 million worth did break the law. The company paid a $125 million fine, avoiding the worst outcome. XRP itself barely reacted to the news, but the market is buzzing about the token's potential return to the leadership ranks. Now Ripple plans to expand its payment system, and investors are anticipating a new surge. XRP is like a bull finally breaking out of the pen. Those are the updates, friends. This week was full of positive events, which is great to see. The market is growing, regulation is easing, and Trump and his sons continue building their crypto empire. That's all from me for now. Until next time.